There's a company that made more profit last year than every casino in Las Vegas combined, and it doesn't own a single slot machine, lend a single dollar, or take on any real risk. It just sits in the middle of your morning coffee, your gas tank, your grocery run. Its name is on the card in your pocket. And its business is the closest thing capitalism has ever built to a legal toll booth on money itself. That company is Visa. And once you understand how it actually makes money, you'll never look at the little logo on your card the same way again. Let's start with a number that sounds like a typo. Visa runs a net profit margin north of 50%. Not gross margin, net. For every dollar of revenue that comes in the door, more than 50 cents drops straight to the bottom line as pure profit. To put that in perspective, Apple, one of the most profitable companies on the planet, runs around 25%. Walmart runs closer to 2 or 3%. Visa is more than double Apple and roughly 20 times more profitable per dollar than the store where you actually buy things. So how does a company you've never done business with directly become one of the most profitable enterprises in human history? Here's the first thing people get wrong. Visa is not a bank. It has never lent you money. It doesn't issue your credit card, your bank does that. Visa doesn't decide your credit limit, it doesn't chase you when you miss a payment, and it never holds your cash. What Visa actually owns is the road. It built and operates the network, the digital highway that carries the message from the store's register to your bank and back again, verifying in about a second and a half that you're good for the money. And like any road owner, it charges a toll every single time a car drives through. So let's walk through what actually happens when you buy a $4 coffee. You tap your card. In the roughly 2 seconds before the receipt prints, a message races out of that terminal to something called the acquiring bank, the merchant's bank. That bank passes it onto Visa's network, which routes it to your bank, the issuer. Your bank checks that you have the money or the credit, sends back a yes, and the whole loop closes before you've put your card away. It feels free. It feels instant. But at least 3 companies just took a cut of your $4, and the biggest cut didn't go to Visa at all. The largest slice is called the interchange fee, and it goes to your bank, the one that issued your card. On a typical credit card purchase in the US, that's around 1.5 to 2.5% of the transaction, plus a fixed fee of maybe 10 to 22 cents. Then there's the assessment fee, which is Visa's actual cut, usually around 0.13 to 0.15%. It sounds tiny. And on your coffee, it is. Visa made maybe half a cent. But here's where the magic of the business reveals itself. Visa processed something like 230 billion transactions in a single year, moving roughly $15 trillion in total payment volume. Take a rounding error of a percentage on $15 trillion, do it hundreds of billions of times, and you've built a money machine that basically runs itself. And that's the part that makes this business so beautiful and so quietly ruthless. Visa doesn't take credit risk if you don't pay your bill, that's your bank's problem, not Visa's. It doesn't hold inventory. It doesn't need factories. Once the network is built, adding one more transaction costs Visa almost nothing. That's why the margins are insane. The road is already paved. Every new car is nearly pure profit. Now here's the question you should be asking: if these fees exist, why don't merchants just refuse? Why doesn't your local cafe say, "Sorry, cash only, we're done paying the toll"? A few do. But most can't, and here's the trap they're in. Studies have consistently shown that when a store stops accepting cards, it doesn't just lose the card customers, it loses sales, because people spend more freely when they're not counting physical bills. Card acceptance has become table stakes. If the shop across the street takes your card and this one doesn't, you walk across the street. So merchants swallow the fee, and here's the crucial part: they can't easily pass it back to you as a visible line item in most cases, so they bake it into the price of everything. That $4 coffee is $4 whether you pay cash or card. Which means even cash-paying customers are subsidizing the card network. Everybody pays the toll, whether they use the road or not. In the US alone, merchants paid an estimated $187 billion in card processing fees in a recent year. Which brings us to the most uncomfortable truth in this entire system: who actually pays for your credit card rewards? You've probably got a card that gives you 2% cashback, or airline miles, or points for a hotel. That money has to come from somewhere. And it comes from interchange, those fees the merchant pays. The banks fund your rewards out of the fees they collect on every swipe. Now follow the logic. Premium rewards cards charge merchants higher interchange fees. Merchants bake those higher costs into their prices for everyone. But lower-income shoppers are far less likely to have the fancy platinum travel card. So you end up with a system where the person paying cash at the discount store is quietly subsidizing the airport lounge access of the person with the premium card. Researchers at the Federal Reserve have described this as a regressive transfer, money flowing, on net, from lower-income households to higher-income ones. The rewards aren't free. They're just paid for by someone who isn't you. So what do you actually do with this? Because I'm not here to tell you to cut up your cards and bury your money in the backyard. The network isn't going anywhere, and used correctly, a good rewards card is genuinely one of the few places where you can be on the winning side of this system instead of the paying side. 3 practical takeaways. First, if you carry a card, make sure you're actually capturing the rewards you're paying into the system to fund, and never, ever carry a balance, because credit card interest averaging over 20% will vaporize any 2% cash back in a single month. The rewards game only works if you pay in full, every time. Second, understand that the price of things already includes this hidden toll, which is one more quiet reason inflation in card-heavy economies has a floor built into it. And third, the big one, this is what a truly dominant business model looks like. A toll booth on an unavoidable road, with almost no cost to serve the next customer. When you're deciding where to put your investing dollars, understanding why some companies print money while others fight for every penny is the difference between guessing and actually knowing what you own. Visa isn't magic. It's just positioned at the exact center of how modern money moves, taking a sliver of everything, forever. Once you can see the toll booth, you start seeing them everywhere, and that's the real skill of building wealth. If this changed how you see the card in your pocket, do me a favor and hit that like button. It genuinely helps this channel get in front of more people who think like you do. Subscribe if you want more breakdowns of the machinery hiding behind everyday money. And next time, we're pulling apart another business that quietly makes a fortune from a fee you didn't even know you were paying. You're going to want to see who it is. See you then.